Hi, this is Scott Murray, and welcome to the Daily Economic Market Shout for Friday, April 7th, 2023. Great having you with us here today. We got a very healthy employment number. Yeah, didn't hit expectations. It was slightly down to that. And yes, there was a lot of public jobs in the number, but still, as we continue to face the headwind of the Fed tightening that has gone on, the market, the economy still continues to see opportunities. And if it didn't see that, we would not have job growth. And getting down to the details, we see still services doing well. We see leisure and education and healthcare. Now, that is a number that we saw in the job JOLTS report as being lower and some less hiring there and less opportunities. But still, remember, medical and education are behind the curve. They were very important categories in the last decade. They lost a lot of jobs and they slowly recovered. People are now starting to see procedures. But what we saw out of the Medicare health report from the trustees of Medicare was that medical costs are not running as high. People unfortunately passed away during COVID, and these individuals are not needing the care, clearly, that they could have. And so the need for personnel, the need for spending has not been as strong. Still, the end of the baby boomers are starting to hit 60. So we still have a significant wave of individuals who are in that sweet spot for medical care. Slowly building, not great, but that is helping this wave. So as other areas have slowed down, and you see that retail trade down 15,000 jobs, financials down 1, information technology up 6. Now, I would have expected a larger negative number out of financials. We had just started to hear percolations of the crisis in the reference week, which is the March 12th. So we probably are going to be there for next month and seeing a lower number. Wages still climbing at a moderate rate, hours still slower. So there are some pockets of weakness out there. What I like to bring people's attention to is the household survey. And what the household survey is saying is something a little different, that we're actually seeing pretty good growth, more than what we would expect. Out there, we're at 160 million jobs, actually moving towards 161 million jobs. When we entered the pandemic, we were at 158 million jobs. So that's a sizable amount of job creation, even discounting any job loss in the pandemic. Employment levels, seem pretty strong. We see the U3 number, which is the unemployment number at 3.5, but U6, which is that part-time number, we see that at 6.7. So still, which is lower than what we've seen before. So again, pretty strong. So when we think about job growth, and we think about it in this number, we actually have now on the household survey, have 577 in the previous month, 177 the month before, and the other 2 months before that, there were a total of 1.5 million jobs. So on the 4-month average of the household surveys, the economy is producing gangbusters in jobs. And the amount of people who are unemployed is falling. It's about 5.8 million. It was 5.9 million, a little bit higher because we did have some people entering the labor force, but it's really not keeping up at this point. Good to have people back. We did miss some people, and 400,000 is not a bad number for the labor gains, but not keeping up with the growth. So where do we sit? Chair Powell said the 100,000 was the line. We are above the line. So the market's reacting and expecting that this is going to produce wage inflation. Wage inflation in services is going to continue to be a pressure. So there is still risks, especially in the short term, to the upside in terms of interest rates, particularly as the concerns about inflation should come down a little bit because of oil, maybe perk just a tiny bit up, but still on a nice trajectory there. And the concern about the banking crisis seems to be passing. So healthy labor market really points to a fairly healthy economy right now, which then postpones any possible recession later into the year. But still emphasize, particularly on interest rates and the Fed action, our risks are sort of moving more to the top. So this one and done may not be what we see. More to come, clearly, but bottom line, economy is solid. This is Scott Murray for the Daily Economic Market Shout. Thank you for joining me.